Good night, everyone. Today is Thursday, October the 6th, around 10:50 p.m. Eastern Standard Time. Okay, guys. Last night we were around here, and we say that the dollar needs it was close to end a cycle. Well, that cycle ended already, and then the U.S. dollar should be now in the biggest correction that the dollar has seen since the lows at 72.50 around June right here. Sorry, my bad, around May. So since like May the 3rd, the dollar it should be on the biggest correction compared to the wave cycle. But for sure it's gonna be the biggest correction since the move around the middle of the summer. So what can we expect right now on the US dollar? Let me see how it goes. If this count is correct, we can have 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, and a 5. As of right now, I can say all the fibers, all the supports founded in this impulse to the upside is being well related to this count. In other words, you're going to see that this is related to this one right there, to the 3802, and then this is related to this one right there at the 236. With that in mind, we are expecting a bounce, another bounce on the dollar. Now, right here, the time of the correction was very small. They were about the same time here. This one was relative more. It was about the same time right here. Now, this is a big wave 2 right here. Very big wave 2. So now, like tomorrow is a non-farm payroll, as many of you should know, and we're expecting a lot of up and downs within the Forex market. Let's see what the non-farm payroll is gonna bring. But technically speaking, the dollar should bounce either from 78.33 area or should bounce from 77.40. For either one of the two, the dollar should bounce. It's already within the wave 4 of the lesser degree, and it should find support at 78.33 or 77.40 if this count is correct. Now, what you need to worry now more than anything is this part right here, because this is completed. You guys can see right here that the high is almost the 2% of the wave 1, and everything works on the count. Now, there is a big divergence, and that's why since Sunday we have been calling for that the dollar is ending a cycle. Look, the divergence. Now, the good thing is that you only got two divergences. You got this and you got this one, give you divergence in this high also. So we believe that the dollar is gonna get this path. Either it's gonna bounce from here to the new high and end the cycle and make 5 ways, or it's gonna bounce from here with the same path. Now, if it's gonna go from here, it's gonna do it probably in a way of the double zigzag. If it's gonna bounce from here, it's in a single zigzag. Now, let's take a look at the dollar in 1 hour. In a 1 hour, look what we have. And this is what is important now, more than anything. We know where we are as a cycle. Now, look. 1, 2, 3, 4, and a 5 swing, or 1, 2, 3, 4, 5, a flat in B, another 3 back, and a 5. So technically is 1, 2, 3, 4, 5, A, B, and and seeing a flat that went to the 618. Now, if this, being this a five-way move right here, being this a five-way move right here, almost done or close to be done, technically this should be a 5. Now, if that's the case, the dollar should bounce minimum. You can see 3 scenarios. First scenario, the dollar is going to bounce from here to the new high. That's the less likely. Second scenario, this right here, let's say right here, I mean, let's say that happened right there, is going to become W. And then the dollar is going to do this: A, B, C. And then from there it's going to do 1, 2, 3 more ways to the downside. So technically you're going to have W, S, and then you're going to have again A, B, and then the C way that is going to go to the 77 area that we mentioned, which is the 3802. That's the second scenario and the most likable of all. And the third scenario is that this is ABCW as ABCY. So technically this is a 3-way instead of a 5, and then the dollar, it won't retreat that deep to the back because already, and then this becomes A, this becomes B, and then this becomes right here, this becomes W, and then this is S as a flat, and then we already have A here in place, and then the dollar is gonna do this, going here and continue lower. It has to be one of the 3. Another scenario can be like a more time-consuming correction, like a triangle. It's too early to call a triangle, but I still believe that the trend is in favor of the dollar, and nothing else that you can do, my friends, than wait for the trend to prove you wrong. So technically the trend is in favor of the dollar. Now that we can get a huge bounce on the dollar, absolutely. That the euro can trade 137, absolutely. All those scenarios can be possible. All we know is that we are in the wave 4 in the dailies, wave 4 in the 8-hour, and I still believe that the most likely scenario is WSY, when this is the first leg within the dollar correction. That's because of the time relationship of the dollar. That's very simple. Now, let's move on to things that can prove that. One last thing before we go over there. In the 8-hour, and I've been mentioning before, there is a way. It's not the primary count, it's an alternative when this is the top. Or another scenario, we got 3 scenarios here. 1, 2, 3, 4, 5 as a principle. Second scenario, 1, 2, and then another 1, 2 that is going to require a drop to around 76 area. Third scenario is that this is 1, 2, 3, 4, 5, and again you're going to see 76. It's too early to call the move, but we believe that more US dollar weakness should happen. We have a long dollar position because there is nothing wrong to play the B way. That's part of trading also, right? Now let's move on to the individual pairs, and let me show you oil in the 4-hour. oil, it looks like it did A, B, C. With that in mind, oil should be here for the biggest correction. Like we've been saying, we were waiting a little bit longer, but technically speaking, the correction can be done by now. If that being the case, and this is the C way right here, then oil should trade higher in 3 ways, like this, to around 95 again and lower. We've been saying for a while now, guys, I know that many of you guys are in the trial plan, but we've been saying that the risk trade was here to make a huge correction. We're very close, I believe. Now let's move on to the individual pairs. Okay guys, let's start with the individual pairs. And the individual pairs, let's start with the New Zealand dollar. Why we choose the New Zealand dollar? Because it's a very clear structure. I got no question in my mind, almost I would say 95%, that we are in this stage, that we are correcting 1 2 1 2 1 2 1 2 3 4 4, and then we go in there. Now what is right here very interesting is the idea that this first leg is A. Remember, any correction can be A, B, Z. Now, very interesting right here that this A is a 5-way move. Well, I should get 1 2 3. What is that confirming? That confirming the path that we believe the market is going to take for the non-farm payroll news, which is dollar strength, dollar weakness. That's the most likely scenarios in the market. Dollar strength, dollar weakness. Now, if you count from here, you can count 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15. To be a modus wave, you need a 16 and a 17 rate. That's why we believe that the New Zealand is within that wave 4. Now, which level we got? Look at the channel here, and you put the same channel over here, and we're getting close to that channel. Let's see how that reacts right there. Now, let's take a look at the 1 hour and see this structure here. Now, 1 second before I move that. 1 2, let's say that this structure is completed. I doubt it, but let's say it is completed. What can be the case? 1 2 1 2 with a deep bounce to around 82 before going low. Now, let's take a look at the 1 hour in the New Zealand. Let me show you what we see. This is what we believe is the path in the New Zealand. We have an entry at 77.50, and we are very sure that what we play in there is 95% is the B way, but there is nothing wrong with it. That B way, let's say that ended, and when we say on the 50, let's say that ended at the 77.50 that we're proposing, 77.80, 77.50. If it ended there, you're gonna see the New Zealand rally to 76. So you're talking about 200 picks right there that you can get. This is a 5-way move. Look at the RSI, giving you divergency. It's a clear triangle structure on the wave 4. You gotta play that. You can see the fibos, how they work. 1 2 to the 2618. Then right here you got 38 or 2, and then if you go more small, you can see a nice triangular structure when he goes 1, 2, 3, 4, 5. Now, higher should trade minimum to the entry that we're waiting, which is 77.50. After that, after the 5, no matter if it's the non-fine peril, no matter whatever it is, after 5 ways comes a 3. Now, and even more with a triangle in the wave 4. That's telling me that this cycle is almost to the end. Now, it can extend if we get back now and we take a look at the Aussie. It's showing more or less, but Aussie is kind of different. Looks like the Aussie is looking for 98, but look, 1, 2, 3, 4. And this is very questionable here. Now, it looks like a 2 swings. Sorry, my bad. But it did more or less the same. So Aussie is very questionable. Again, it's giving me divergency. So the dollar trend is around the corner. I don't care if it's non-fine peril, whatever it is. At least 3 ways I'm gonna get in favor of the dollar, and I wanna be in that trade. Now, if I know after the 3 ways and I see that the structure becomes corrective, we close the trade and we switch the side and we become dollar bears. As simple as it is. Another one, and I have 95% insurance that we are playing a big way on the dollar tonight before the news, or at the spike from the news, and then the dollar most likely is going to be soar again. That's the path that we believe that the market is going to take because of the non-fine peril as of right now. Now, the dollar CAD, very simple structure, but very indicated of what the market is going to do. Why you have in the dollar CAD from the top? Why you have in the dollar CAD from the top? You got 1, 2. This looks like a flat right here, and now it's ending a 5-way swing on the dollar CAD. This is ending a 5-way swing that it can extend to around 103.17, but after those 5-way swing, look, it's gonna come with divergency. What's coming? US dollar strength. But don't get confused, guys, because you're getting 5-way swing, and in an Elliott Wave pattern it comes 1, 2, 3, 4, 5, and then it comes 1, 2, 3. So after those 3 comes minimum 1, 2, 3, 4, 5. So technically this is on the bull market and the black cat is other way. I'm sorry about that, but technically do not matter. We are ending here. So what's coming is 1, 2, 3, 1, 2, 3, 4, 5. So technically the dollar CAD should follow this path. Should follow 1, 2, 3, 1, 2, 3, 4, 5, and then it should bounce higher. Now, if we take a look at the CAD in the 4-hour, guess what? CAD in the 4-hour, ideally, is going to go to 103.07, and I want to make a distinction here. To get to 7 ways, you need 5. So any structure that you see now in 5 can become 7, and you can get pretty fast to 103.01 and higher. Now, remember, guys, that we're mentioning that the dollar CAD can be nasty. Now, if you see the dollar CAD bouncing for around 103.01, the nest can be in place, and then we should be a buyer of the dollar CAD a little bit lower. I would say around 102 or 101. We should be a buyer, because this can be a nest. Look at the dollar CAD in the weekly. Huge move coming in, huge move coming in the weekly. So be aware of that. What you got from the lows on the dollar CAD, three-way move, nothing more than that. But it can be a nest, and remember that a nest is nothing more than a three-way move. So this can be the case, and then a separation, something like this in the future. So very interesting trade right here, guys. Now finally, let's take a look at the euro. I mean, in the euro there is not too much that you can say. Many a scenario, many very confused. All I can tell you is this, and I'm going to put it simple to you guys on the euro. No buyers, no either side buyers. The recovery so far is in three ways. It goes 1, 2, 3 ways. Ideally, it's going to end, and that's why we're selling it. Ideally, it's going to end a cycle from here pretty soon. Either 34.50 is the top, or around 34.70 is the top. Either one of the two ideally is the top. Do not matter. Now, how you can see it? You can see it as an ending diagonal. When this low is the 3, we are in the 4, and then the euro is gonna crash. In other words, it's gonna drop to 130, 128 for the rest of the week and next week. That's one scenario. The second scenario is that this is A, B, Z. What you're gonna get, like the dollar, 1, 2, 3, and higher. Got it? Third scenario, a deeper correction. It was this low is the double zigzag that we were talking, that started at 149 and ended at 131.41. So what you got, 1, 2, 1, 2, like it is presenting right here, like an alternative 1 and alternative 2. Nothing more, guys. No one knows if it goes to one side or goes to the other. The market is very iffy. The market is making very close to make a turn in favor of the risk trade. And I can show you the last piece of the puzzle. And the last piece of the puzzle is the S&P. The S&P closed. The S&P closed at the point that needs to be closing. Technically, what you got in the S&P? 1, 2, 3, 4, 5, 6. I see 7 swings to the downside, to be honest with you. Now, an ending diagonal, you need 3 more, and you need 3 more. Now, that this can be the bottom, absolutely. That I'm favoring, no. Why? Because in my book, a wave 5 needs to get to at least the 1.236 of the previous inverse wave 4 feeble level. I missed it by 5 ticks. I can live with it. Now, if the bottom is in place, the S&P is going to trade higher to around 1300. That means euro 140. That means dollar 274, 75. As simple as that. Now, S&P 1 hour. S&P 1 hour. What you got? 1, 2, 3 waves. Like I said today on the forum, 3 waves from the bottom. Only 3 waves from the bottom. You don't have a 4 or 5. 3. If the S&P tomorrow start going lower, what you need to do, you need to trace a fever here. If it passed 1130 without a new high, then you're gonna say that the dollar is gonna get higher. Otherwise, you know what, guys? Otherwise, it's gonna do this. S&P is gonna trade lower tomorrow. It's gonna trade lower tomorrow. It's at the 2618 area. It's gonna trade lower tomorrow. It's gonna make wave 4. It's gonna make wave 5. It's gonna make 1, 2, 3, and then higher. Technically speaking, that means lower dollar. So as clear, I can explain it as clear as it is. If the, let's say if the non-farm payroll happened at this stage right now at 11:20 p.m. New York time, I would say dollar weakness with the news. Let's see where we are at 8:30 in the morning tomorrow. All right. Hope you guys have a good day, good morning, good night, and talk to you guys tomorrow.